Hello everyone, welcome back to another video. If you're new to this channel, my name is Farhan and I help accounting students like you ace their exams. Today we are practicing a question for the topic correction of errors. You can see the question on the left hand side of your screen, and on the right hand side we have got all the workings which I'll go through and explain step by step. What I need you to do now is focus and follow through for an excellent understanding. With that being said, let's begin. Flora prepared her financial statements on 31 March 2023, and the profit for the year was $16,230. After she had prepared her financial statements, she found the following errors. So we are given 3 errors that have taken place, and we are required to prepare the journal entries to correct these errors. And after we are done with the corrections, we will prepare a statement of adjusted profit. So let's look into the first transaction that is given here. Flora had paid $2,500 for a computer, $580 for a printer, and $18 for printing papers. She had debited $3,098 to office equipment account. Now, the $3,098 that's being shown here is the sum total of the price paid for the computer plus the price paid for the printer and the cost for the printing papers. Now, this is not correct because it violates the materiality theory. So when we look into $18, which has been spent for printing papers, this cost is not significant, where we could record it as some kind of capital expenditure or buying an asset or making improvements for an asset which we intend to use for the long term. Printing papers can therefore just be simply classified as a regular expense that has been incurred. So you could classify printing papers as an office expense in this case. So what we want to do is remove the $18 which is included within this $3,098 total that has been added in the office equipment account. So we are essentially reducing the balance of the asset. When assets decrease, we credit it. So we are crediting the office equipment account by $18, and simultaneously we have an expense that we have incurred for printing papers, which is office expense. So all expenses, when they increase, we debit it. So we are debiting office equipment by $18. Now, after this correction has been done, based on the journal entry we did to correct it, we understand that when we debit the office equipment, our expenses are increasing by $18, which will therefore decrease our profit given the inverse relationship between profit and expenses. And when we credit the office equipment by $18, we are decreasing our assets by $18. All right, so now let's look into the second error. $798 paid for insurance had been recorded as $789 in both the insurance account and cash at bank account. All right, so you can see the original number which we had in this transaction was for $798, but we ended up recording it at $789. So when we have got errors that involves the misplacement of numbers, that is what we classify as an error of original entry. Based on what has been stated there in the transaction, we recorded $789, which is $9 short for both insurance and cash at bank. So when we are paying for insurance, our cash at bank will obviously go down in value, but it now needs to go down in value by a further $9. So we are crediting the cash at bank account by $9. And simultaneously, our expenses are increasing by $9. When expenses increase, we debit them. So we debit the insurance expense by $9. So now let's look into the third transaction which we've got. $455 received for commission income had been debited to the commission income and credited to the cash at bank account. All right. So when we read this transaction ourselves, just by reading the first few words, $455 received for commission income. if we were to read up to here and we decided to record this transaction ourselves, how would we record it correctly? We would debit the cash at bank account, because obviously if we are receiving commission income, then the only thing that can go up in value is the bank account, all right? So when assets go up, which is the bank account in this case, we debit them. So we debit the cash at bank account by $455. Simultaneously, any income that is earned or any revenue that the business earns is what we always credit. So we are crediting the commission income to reflect that increase in income, and that is by $455. So this would have been the correct way to record it. But what the accountant of Flora, I would say the bookkeeper because it's a journal entry, so what the bookkeeper of Flora ended up recording it is to debit the commission income by $455 and credit the cash at bank by $455, which is a complete opposite to what we should have originally done, right? So therefore, this type of error is what we classify as an error of complete reversal, where the entries have been reversed. Now, how do we correct this? We understand that we want a net balance of $455 credit for our commission income and a net balance of $455 debit for our cash at bank account. So how can we achieve this? So what we need to do is that to correct the accounts, we need to come up with such a number which offsets the previously recorded balance and then gives us a surplus, ultimately resulting in the net balance that we have aimed to achieve. So what do we understand by that? So let's look into the cash at bank that the bookkeeper of Flora made a mistake. All right. So if we were to offset the credit cash at bank by $455, we would need an additional $455 on the debit side. All right. So when we debit the cash at bank account by $910, as you can see here, we are first offsetting the entire credit cash at bank $455 and then leaving us with a surplus of $455, and that would be a debit. All right. The same thing applies for the commission income. So we wanted to end up with a net commission income credit of $455 based on this correct way to record that we know. All right. So how can we end up with credit commission income $455? So we want to write credit commission income not by $910, because when we do that, it first offsets the entire debit commission income by $455 and then leaves us with a $455 surplus on the credit side. All right. So the correct way to correct any complete error of complete reversal would be to always double it with the opposite debits and credits that the mistake had been made here in this case. All right. So now part B, prepare a statement of adjusted profit after the correction of the errors. All right. So we started with the unadjusted profit as given in the first sentence of the question, which is $16,230. And then we are adding the commission income of $910, which is the other income that we are adding here. So obviously when there's an increase in income, profits will go up. Now, how do we know there's an increase in income? Because just in the last transaction, which we have fixed, we corrected the transaction by crediting the commission income by $910, which means we are increasing the income by $910. And that is what is being reflected here as a positive, which is added to the unadjusted profit. Then for the first transaction, we understand that we are reducing our assets and then we were increasing our office expenses, which is to include the cost of the printing papers. So when office expense goes up, obviously it is going to result in a reduction of the profit we originally had. Therefore, we will subtract the increase in office expense by $18. Now let's look into the second transaction with regards to the insurance. So the way we corrected it was to debit the insurance expense account by $9, which means we were increasing our expenses by $9. So if we are increasing our expenses again, then our profit should go down. Therefore, we are subtracting the increase in insurance expense of $9 from the unadjusted profit. So that leaves us with an adjusted profit post correction of all errors, and that amount is $17,113. All right. So that's all for today's lesson. If you found value in this content, make sure to drop a like and subscribe to this channel, and check out all the other videos that I've got in the playlist for this topic, correction of errors. With that being said, I'll see you in the next lesson.